Now, according to data made available and the Q3 report that's been released by CBN, the total federally collected revenue went down by 4.2%, which is below the quarterly budget estimate. Now, joining me to discuss the report is Usoro Essien, his head economic intelligence and strategy at Associated Discount House. Usoro, it's great to have you on the show. It'll be good for you to start by running through some of the key takeaways from the report.
Thanks for having me, Didi. The good thing is, even though the revenue projection was below by about 4%, the non-oil revenues actually improved. You know, we had non-oil revenues of over 1 trillion. Historically, they've averaged about 600 billion quarter on quarter. But this quarter, it rose from 500 billion the preceding quarter to about 1.something trillion. And that tells you that Q3 was a very good year for some of the companies, because if you break that figure down, you would see that it's company income tax that did the highest growth. It did a growth of about 300%, from 100 and something billion to just shy of 500 billion. So when you you consider that the non-oil revenue is surpassing budget estimates as a Q3, then it offsets a bit of the oil revenue decline that we're seeing. And another good thing about the oil revenues is that crude oil sales actually matched the budget projections. What fell short of it was the PPT and the VAT. So it's a good story on the fiscal side. Yeah.
But in your opinion, how realistic are the 2014 budget assumptions?
Well, for me, we've always said that the 2013 was overly bullish. We felt they would be a bit more prudent with the 2014 estimates. A 2.3 odd million barrels per day estimate is, in our opinion, high. We would feel that the MTF should use the base year projection for 2014 to at least, if not mirror, the current production levels we have now, which is below that. About 2.1 billion levels would be prudent, and then rise it from there. Because until you fix those fiscal leakages on the pipelines and that are obstructing production levels, I don't really see how they're going to achieve 2.3 million barrels. But that is not as important as the oil price benchmark. The oil price benchmark, even though it's it's an assumption that they've had, and it has not yet been passed. The president has postponed presenting it to the legislative arm. What we would have loved is for the federal government to take into consideration that 2014 you expect increased oil supply. There are new methods in fracking, so you think things like shale oil will actually start coming with more output. So if you see the supply increasing, it would be prudent to have a lower oil benchmark, something around the $70 mark. But then again, that's between the executive and the legislative.
Now, many are concerned about the state of the nation's external reserve and also about the excess crude account. Is this something that you're concerned about?
Well, the excess crude account, year to date, is depleted about 68.7 or so odd percent. It's from around close to 12 billion that it was at USD. It's gone to about 3.6. It's bound to happen when your budget estimates are not being met, meaning the revenue profile you expected this year is falling short. Then you dip into your savings. The worrisome fact about it is that from latest CBN figures, total reserves now, which the excess crude account is just a component of, is not fully. The level it's at now is buoyed largely by FPIs, foreign portfolio inflows. So if a reversal, which is imminent, it'll happen, maybe it would start to happen sometime next year, you'd want to know what level buffers would be at immediately that starts. Estimates are around 20 billion. And our current reserves are about 45, so that's worrisome, So it's not just the excess crude account, but the total picture for the reserves. Yeah.
Okay. Now let's talk about inflation going into 2014. What are the major drivers?
Okay, the major drivers of inflation. It's skewed towards food. So this year we've had a lovely conditions for especially for agricultural crops. We've had bumper harvests. Contrary to expectations, there was no flooding, so we anticipate that we should have a good level of inventory this year, which should go into next year. So during the planting season, when we'll rely on those inventories, you expect food prices to be moderated because you expect there should be an adequate supply of food in the market. However, inflation next year will actually be a bit funny because on a base year effect, we've had low figures this year. A month like October, for instance, was 7.8. You would expect the year-on-year effect, if food prices can stay moderated, October 2014, yes, you'd believe you'd get single-digit figures. However, if the good climate conditions we had cease, then anything can happen. Pressure on food prices could actually get you back to almost double digit
now,
inflation.
let's talk about that target to keep inflation within 6 and 9%. How realistic is this?
Well, the base effect has virtually taken us to 7.8 now. That's the lowest figure in about 5 years. Core inflation has been trending up, and the environment we are painting for next year, you expect core inflation to continue trending up, especially with increased government spending and also the possibility of imported inflation via foreign exchange rate. So core inflation could actually make that target range not very feasible. However, single-digit territory is feasible. Yeah.
Now, of course, there's 2015 elections. Are you concerned about the inflationary impact of fiscal spending ahead of those elections?
There are two things that will happen. The central bank has been very firm in its stance that two things will happen. Interest rates will remain high if government spending is unabated, and also the fact that the central bank wants to try and keep public sector funds within its own system, not outside. And I think what we would see most likely is the monetary stance would be more keen to use tools like that CRR on public sector deposits. You probably would see them try and take nearly all those funds out of the private sector hands. Yeah.
Usoro, thank you for sharing your view with us. That was Usoro SCN, Head Economic Intelligence and Strategy at Associated Discount House.